General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
So, I've seen the weekly outlook. If you're in the Telegram, weekly outlook was posted. If you're not in the Telegram, it's in the bio on the channel. Take it easy Monday. Protocol in place. There was news today. What's tomorrow? No news tomorrow. Also, no, it's the day before Fed fund rate. Fed watch is pretty much locked in for no rate cuts. Let's see if the data today affected June, because June did flip. Oh, let me get my screenshot thingy. Yeah, no chance for getting a rate cut Wednesday. It's not even a slight chance. This still a flip. We're at 30%. This is something I gotta monitor now for June. I still think we can get cuts in June. 30% chance of a cut in June. Earnings. There's no top 10 earnings this week. We do have AMD tomorrow, just kind of sentiment. Lucid was the first trade I ever won. No top 10 earnings, but AMD is sentiment. Sentiment to NVIDIA. Let's check out this dollar. Let me clean up this. Let's go to the dollar on the daily. We're not closing below that up candle. That's a problem for me. Once per bar close. Crossing down, crossing up. Price. Can I put less than trend line? Okay. Yeah, that works. Only once. Open-ended. Yeah, open-ended. That'll work. I still kind of think yeah, I don't need it triggering like that. I still think we need to run that high first, and then I want to see it close through that open candle. Run or close through the low of the up candle. Today, price came to fair value, came back to weekly open, rejected off of it. Rejected off, retraced back to new week opening gap, and then dropped again. I'm looking at this day. Like engineered liquidity. Mm, this has to be like 50% or something. Okay. Mm, so far, small range Monday. Mm, I would like to see both sides of Monday get ran. Both sides of today get ran. And then some real direction. I want to sail up here, down here, to get down here. Oh, wrong button. Selling above the high makes sense. As far as reaccumulation, 50% of previous week's range makes sense. Reaccumulating at EQ of previous range makes sense for longs. Is selling above original consolidation at 25. What's that? 53675 makes sense for sales. Kind of match with this. This has been tapped too many times for me to respect it. This kind of lines up with this breaker here, up candle before the down move. It's an H4 breaker. It's kind of huge, but it does make sense. It's right at 50%. Monday is such a tight range. It's good. Now I'm thinking AMD vibes. So manipulate. Lower. Reaccumulate. loans at fair value and offset distribution above highs. This is a good target here. Slow hanging fruit. This thing always has to update, like every time. Low hanging fruit 19,901.25. Low hanging fruit 19,901.25. All right. All right. That's that on that. Y'all have a good day. Peace.